I'm Jean, a researcher at The Expert. In 2023, Asia-Pacific stock markets, led by Japan's Nikkei 225, experienced significant growth, with both the Nikkei and the broader topics showing gains of over 10%, following a surge of more than 25% the previous year, marking their largest annual increases in at least a decade. Analysts have been optimistic about Japan's stock market for several reasons. The Nikkei 225 index rose 0.3% to surpass the price level of 39,300, while the broader topics index gained 0.2% to reach the price level of 2,680 as Japanese shares hit record highs in response to the latest inflation report. Despite headline and core inflation rates in Japan slowing to 2.2% and 2% in January respectively, from 2.6% and 2.3% in December. However, the core inflation figure exceeded market expectations for a further slowdown to 1.8%. Notable gains were observed in the index heavyweights such as SoftBank Group, which is up 2.7%, Mitsubishi UFJ, which is up 0.4%, Tokyo Electron up 0.4%, Toyota Motor up 0.4%, and Nippon Steel up 2.3%. This moment is significant for Japanese equities as the Nikkei's share average finally surpassed its 1989 peak after years of rally driven by cheap valuations, corporate reforms, and diverted investment flows from a struggling Chinese stock market. Analysts, while acknowledging concerns of a potential bubble, remain optimistic about the country. This optimism is underpinned by robust fundamentals and significant regulatory reforms in Japan's financial markets, expected to bolster corporate profitability and shareholder returns with an emphasis on improving valuations and earnings for listed companies. Enhanced corporate governance, evidenced by a reduction in cross-shareholdings among Japanese firms, further supports this positive outlook. Analysts Bruce Kirk and Kazunori Tatabe foresee increased emphasis on corporate governance in 2024, driven by pressure from the TSE, the Tokyo Stock Exchange. The recent record surge in the Nikkei index highlights the positive impact of corporate governance reforms on stock prices. Furthermore, institutional investors like BlackRock have expressed confidence by increasing their exposure to Japanese equities, driven by strong earnings, share buybacks, and shareholder-friendly corporate reforms. Warren Buffett's bullishness on Japanese stocks, particularly trading companies, has also contributed to market confidence. Buffett's investments in trading companies like Marubeni Corp., Mitsubishi Corp., Itochu Corp., Mitsui & Co., and Sumitomo Corp. outperformed the broader market by the end of 2023. Buffett's recent statement about likely increasing his stakes in these companies further boosts confidence in the Japanese market. Additionally, the upcoming spring wage negotiations, Shunto 2024, are crucial for the Japanese economy. While Shunto 2023 saw the highest wage increase in 30 years at 3.58%, the latest GDP data revealed a 0.1% contraction, leading to a technical recession due to declining private consumption. Therefore, the significance of Shunto 2024 lies in the need for substantial wage increases to address inflation and stimulate positive changes in Japanese economic policy. Finally, expectations of a stronger yen pose a challenge, with forecasts indicating appreciation due to U.S. Federal Reserve's plan to lower the benchmark interest rate and the Bank of Japan's expected phase-out of its negative interest rate policy. A robust yen may pressure stock prices, particularly for major electronics and automotive companies. However, it's believed that Japanese stocks can overcome this challenge, as corporate earnings are expected to continue improving. Nomura Securities forecasts an 8% growth in 2024 for listed companies, driven primarily by advancements in the semiconductor and related electronic sectors. The debate remains whether Japan will sustain its bullishness and transition positively or succumb to another bubble. If you found this video insightful, please subscribe, share, and like it. Thanks for tuning in, and see you in the next one.